Hi, this is Roger Conrad. I'm co-editor of MLP Profits. What I want to talk to you about today is the Gulf oil spill continues to worsen. Of course, a lot of the efforts by BP have come to naught. It looks like it's going to be those relief wells that eventually in the spillage, and there's going to continue to be a lot more oil coming out of there. Some people have said that when hurricane season starts, if it's still gushing oil, if they haven't figured out some way to contain, you can just paint the Gulf black. So it's a pretty depressing situation, and you know, definitely if you live on the Gulf Coast, you know, it's quite horrible. On the other hand, there are a number of companies that I think will come out okay from this, and those are companies that are drilling on land. You know, as Louisiana Senator Mary Landrieu said just recently, you know, this oil, we wish we didn't need it, but we do need it as an economy, and there has to be a way to keep things flowing. I think it's going to be a lot more expensive to drill offshore oil for good reason. I think we're going to see relief wells pretty much being a standard practice going forward. Certainly there's going to be a very high level of skepticism approving any new licenses or projects. In fact, the Obama administration has taken away 33 exploratory licenses in the wake of this crisis. I think there's going to be a lot of lawsuits, and certainly BP is in a lot of trouble. You know, there's been certainly a lot of market value come off that stock already, but it's not one that I would recommend for conservative investors at this point. I think there's certainly a lot of downside in that one. But again, companies that are doing things onshore, and just as a contrast to BP, I'll give you one that's you know, a company that's another super oil. That would be ExxonMobil, and which is finishing acquiring XTO and becoming a major player in the shale areas. And the shale is going to become more and more important. Again, as an area where drilling can go on with a little bit under a little bit easier conditions, and certainly without the stigma of the offshore. And you know, this switch again is very bearish for a large segment of the economy, but it is actually pretty bullish for a number of the MLPs that we have in the portfolio, and that's what we're here to talk about. Really, is those opportunities. You look at a company like Enterprise Products Partners with a tremendous investment in the shale. You look at a company like Energy Transfer Partners, whose general partner, Energy Transfer, general partner, ETE is the symbol, has acquired the controlling interest or the general partner interest for another company called Regency. And we have both Energy Transfer Partners and Regency Energy Partners in our portfolios. I think their relationship is going to continue to deepen as they build out infrastructure in the shale. And again, shale is going to become more important. That means infrastructure is going to become more important, and that means more opportunity for these MLPs. So a little bit of lemonade out of lemons there. Thanks for tuning in. We'll look forward to chatting with you next time.